The recent freeze order obtained by the Central Bank of Nigeria on the accounts of some financial technology companies allegedly operating without obtaining approval could send a negative signal to investors, both local and international. The CBN obtained the order freezing the accounts belonging to at least 4 fintechs. In recent times, the Apex Bank has been keeping its eyes on loopholes to ensure reduced pressure on the local currency amidst scarce inflow, with dollar scarcity in Nigeria. In July, the bank stopped weekly sales of dollar to Bureau de Change operators on the allegation of various infractions, including money laundering. Nigeria has seen a rise in fintechs in recent years and has produced some of the continent's most notable payment platforms. The best known are Flutterwave, Paystack, and InterSwitch. The companies have raised billions of dollars in funding, but some analysts have raised concerns about the regulation of the novel sector constraining innovation in some ways. This recent action by the CBN has raised many questions. Is the CBN really protecting the economy? Are fintechs partially responsible for the dollar shortage? What signal does this send to investors? Is regulation an issue with the CBN and fintech startups? Today, we're looking at the Central Bank of Nigeria restricting operations of some fintechs. I'm Tolulokwe Adelaru Balogun. Welcome. This is Business Edge.
It is on foreign.
Now, joining me on the show is Ibrahim Bashir. He's the CEO of Delali.com, and Delali is a platform that supports small businesses in creating a digital process for managing invoices and inventory as well. Ibrahim also has more than 20 years experience in the Nigerian business ecosystem, and he definitely will do a great duty to this conversation. Ibrahim, welcome to Business Edge. Thank you so much for joining me.
Thank you. Nice to meet you.
All right. So before we get into the details of what has happened and what possible laws could have been broken, let's look at how easy it is to really operate in this space, as it may be. How easy is it to get an operating license, to operate an asset management company or other financial services permits in Nigeria? What's this ecosystem like?
Well, the ecosystem, it's generally new and it's evolving. In the last 4 to 5 years, there have been a boom or a rise in the number of startups that are focusing on financial services. The central bank and along with regulators are sort of playing a catch-up to put in the necessary policies and frameworks to support or regulate the sector. So it's not very easy to get a license, but by and large, the central bank in particular has actually made the process a lot smoother. Mm-hmm. And you notice that a number of startups already, fintech startups have already received licenses for different categories of service offerings that they provide. So generally speaking, it's been getting better. I know that the Securities and Exchange Commission has also come in to kind of regulate or issue licenses, and I believe one startup has already received a license since the declaration by the Securities and Exchange Commission to regulate certain startups in the sector.
All right, and it's a good thing you mentioned SEC because we will get into them and possibly overlapping responsibilities with the CBN. But one of the biggest allegations against these 4 fintechs is that they're playing a part in making the naira weaker against the dollar because of the foreign exchange deals that are carried out on their platforms. Now, the CBN says that utilizing FX sourced from the Nigerian FX market for purchasing foreign bonds and shares is in contravention of the CBN circular that was of July 1st, 2015. So what do you make of this particular allegation?
Well, the regulator is a regulator, and it's very difficult to go against the regulator. However, when you consider the market and what drives markets, it's demand and supply. People that are investing this money, whether in Nigeria or abroad, invest to make a profit. And that money, technically speaking, comes back into the system. The biggest challenge for Nigeria has been our forex management. It's been very difficult. We know that we're not exporting enough or making enough forex that comes into the country. So I know that the central bank is doing its best to keep the currency stable, and they will take as whatever policies that they need to enforce to ensure that there is some relative stability in the market. However, like I said, one of the biggest challenges is how do you allow for free flow of trade, investment, and opportunities, because everybody is investing to make money and to make a profit. And if the markets abroad are very attractive, businesses will or investors will naturally flow whichever way there is profit.
All right. So in terms of the influence and the pressure, because a lot of people found that particular allegation by the CBN to sound so really. So let me ask you, really, how much pressure, how much influence can the activities of fintechs have on the naira dollar relationship to the point that the CBN is pointing the finger at them?
That's a very good question. The thing is this: fintechs are an enabler for transactions to make things easier for people to trade or do business and improve their lives. One of the things that we need to accept is that whether a fintech or not, money will always move to where profits are gained. If you flip things around and look at the inflows of money, you see that recently there was a crypto ban, and you'll have noticed or you'll have heard that remittances from people or from the diaspora to Nigeria has dropped significantly in the last 1 year. And that is because people are looking for alternatives to send money to Nigeria, and that's where crypto came in. So yes, fintechs may have an impact, but the question is, how do we measure? What volume in terms of transactions are fintechs actually taking out of the system? I think that would have been a more objective way to look at things. Currently, you see that this ban has come with other things like banning of or restriction on providing funding, monies to Bermuda changes. Now, that tells you that it is not a peculiar case that fintechs are the only ones that are causing this dent in or putting pressure on the naira. The main fundamental question we need to ask is, how can we stabilize the naira? How can we increase trade where Nigeria makes enough forex to finance its demand for services or goods that we import? That is the biggest challenge, and I don't think fintechs will be a stop. You know, it's like, even if you block fintechs, there's another door that will open somewhere.
Yeah. It's almost the natural progression of the markets because of the introduction of technology and, of course, the internet. So with this move, even though it's directed at mainly 4 fintechs, there are many people who are looking at the wider fintech space and what it means. Now, the Nigerian Exchange Limited, NGS, has said that collaboration between fintechs and the capital market would effectively create a digital economy, as well as increase financial inclusion and cashless payments. And then you've also seen SEC. SEC came out a number of years ago with a framework in terms of how they would work with fintechs and even cryptos. But the actions of the CBN in recent times have made people question whether or not they really are on board with the power and potential of financial technology companies. Do you think that the CBN has a good view or perspective of the fintech space?
Well, the CBN has, in terms of approach, has not differed from most other, what we call them, central banks of other countries around Africa and around the world. However, the biggest challenge is this: we are entering an era that is mostly unknown, whereby finance and traditional finance is getting challenged by technology and new ways of doing things. How do you catch up? How do you adapt to that, what we like to call very fast changing environment? How do you put in the right policy frameworks to allow for a smooth transition from the traditional way of doing things to the new way of doing things, which will become the tradition? The CBN, from what I know, has been very, I would like to say, proactive in a way. I think they have a lot of informed people in the central bank who are looking at these policies and sort of shaping these policies. The challenge is the speed at which these policies are adopted, and the second is the manner by which the policies are released or issued. It's almost like a fiat, where people are not given the opportunity to plan or understand. These engagements need to be more, they need to be more proactive in terms of how they engage with fintechs, because they're here to stay. That's the fact.
All right, Ibrahim, we're going to go on a break. He says that fintechs are here to stay, but some analysts are calling this move by the CBN a desperate measure that could actually endanger the fintech space in Nigeria. We'll get into what this signals for investors into Nigeria's fintech space right after this. You're watching Business Edge, and we're looking at the move by Nigeria's central bank to restrict the accounts of some fintechs in the country. Now, just before the break, wanted to get into how this plays out for the investors. Ibrahim Bashir is joining me on the show today. So, Ibrahim, some analysts have said that this could worsen foreign investors' perception of the country's investment climate and may constrain private investments in the fintech space. What signal do you think that this sends?
Good point. It's sending the wrong signals, 100%, because right now there's a lot of money that has moved into Nigeria, and most of the money from international investments have come into mostly fintechs. In the first half of this year, you see that Africa has received close to $1 billion in investments, and in Nigeria last year, that's 17% of most of the investments that came to Africa came to Nigeria. Investors are going to be very wary of these challenges, but one of the reassurances that they have is that most of these companies are usually registered offshore, so they try to protect themselves from these policy changes that happen in Nigeria. But it reduces the appetite for Nigeria as an investment destination.
And we've seen that appetite reduce over the past several years, actually. A number of actions and moves have made people wary and question. But also, let's talk about that regulatory environment and that policy environment as well. So as I said earlier, the Securities and Exchange Commission is supposed to be in charge of regulating investments and the operation of related businesses in Nigeria. But we've seen them seemingly take a back step to the CBN, sort of allowing the CBN sort of to direct the flow or to set the temperature for this type of investments in the country. And there seems to be some overlap. We also saw this with the crypto bank. SEC actually has a framework, but they seem to have taken a step back when the CBN made that ban. What do you think we need to do? Are they on the same page? It seems one agency is ready to move ahead with how technology and innovation has brought about changes. They're bringing out frameworks they want to work, and another understands, but they seem to be making decisions that are restricting, or at least people are questioning the decisions they're making in terms of how they really see the potential of the industry. So this regulatory overlap, what's the solution to this?
Oh, Tolulope, that's a very interesting question. One of the biggest challenges is, who regulates technology?
Yes.
I mean, where is this overlap, where does it start and where does it end in terms of how you define technology? Now, technology is a part of every single thing we do. So it's in finance, it's in transactions, it's in trade, it's in healthcare, it's in logistics, and everywhere. So it becomes very difficult to say this is the best framework. However, what needs to be done is all the organizations or regulatory organizations need to come together and come up with a universal sort of policy that can be clearly defined as to this is where you start and this is where I stop in terms as a regulator, right? This needs to be clearly defined, but that interaction between agencies may be coordinated by the Ministry of Finance or Ministry of Planning that's what needs to be done in Nigeria. It's a problem that is not restricted to Nigeria. There are other countries that are also facing the same challenges to see how best to come up with the right framework and implementation plan.
So the companies have released statements. They've assured their customers and clients that their money is safe. But I think the question has to be, how safe really is that money? With this freeze on the account, is there any potential for these businesses to continue to do business? Are they absolutely in a limbo for the next 180 days, less than now, since it has taken effect? How safe is people's money?
Well, I can't answer that question of how safe people's money is. You will just have to rely on the statements of these fintechs and these organizations that have released them. One of the things that we can credit them with is that they have solid investors behind them, and they will ensure that best practices are taken when handling investors' monies.
All right.
The thing is that the next 180 days gives enough time, I think, for these fintechs to discuss and engage with the authorities and see how best to come with a win-win situation for everyone. Because at the end of the day, we're talking about not just investor money, we're talking about jobs, we're talking about opportunity, we're talking about future investments in Nigeria, and creating that enabling environment is key. And I repeat, it's key for future companies that are coming up.
And this was actually the next place I wanted to talk about, because you talk about engagement, and there was a lot of response on social media. Many people saying that the companies are not engaging effectively with the sector regulator. But you also mentioned earlier, even the regulator itself has a responsibility of engagement, of communicating, of coming to the round table. These are concerns, of course, that are not new. The circular that the CBN referred to is from 2015. Some of these companies have been in operation before that and shortly around that time. But in terms of sector engagement with the regulator, do you blame them? Is there any kind of engagement that can prepare a business such as fintech business for policy changes, for regulation changes? Sometimes that come with changes in administration. Sometimes that come with policies that are above and beyond, like this naira policy. Nobody would have really thought it would have gotten down to the fintechs.
Well, there's never enough engagement. I think what needs to be done is for us to find more ways of engaging, both from the regulator's perspective and even from startups and mostly fintechs that operate within the purview of the regulator. The key thing is that quite often, oftentimes it's difficult for us to see eye to eye on a number of things in terms of how do we even engage. You notice that in the past, some of the policy frameworks that have been put together where enlightenment and engagement have been set up by regulatory agencies, you sometimes get little participation from most of the industry players. And that is because of the usual, how will I put this? Just our usual attitude of we don't trust the system, or are we sure anything is going to get done? Now we're seeing that a lot is changing, and we need to engage and more or less quite literally knock at the door of the central bank and say, okay, who do we need to talk to? How do we continue to engage and come up with the right way of interacting and understanding each other to develop the right policies that is a win-win. The most important thing is that win-win policy where there's a balance between what the regulator is trying to do in terms of keeping the sector clean and attractive and creating that enabling environment. And on the other hand, allowing the companies that free opportunity to innovate, because anytime you try to regulate innovation, it becomes a problem for people to create. And that's what we see all around the world.
Now, do you think it's possible for companies to, particularly fintechs, not these fintechs, but any fintech, to circumvent required protocol for registration and establish a venture where their customer base has grown and they've continued to offer services that they consider and their customers consider to be legal, and this is just happening sort of willy-nilly? Because what the CBN is literally saying is that these companies established themselves, they've been running operations, and we consider their activities to be illegal. How possible would that really have been?
It's very possible. Again, this is not something that is peculiar to Nigeria. You know, things move very, very quickly. It's very easy to set up a website. launch an app and what have you. However, the challenge here is even the fintechs are starting because there's no, I don't want to use the word clear, but the process is not clear. So for example, now, if I'm starting a fintech that has to do with certain levels of transactions or investments, who do I go to? Is it the Securities Exchange Commission? Is it the Central Bank? Is it Ministry of Finance? Is it Budget and Planning? Is it NITDA? You know, who do we go to? Is it NCC? So these are things that we need to, there needs to be a clear, very clear framework and very, very clear way of engaging or even disseminating information. So if I go to the central bank's website, or where do I go as a fintech when starting to see that this, my company that I'm starting up falls in this category of regulatory requirements in the system.
All right, finally, Ibrahim, before I let you go, what do you think is going to happen? There have been a lot of speculations. We're just barely maybe 5-6 days into the 180 days. The CBN says they're going to continue investigations. The companies are saying that money is safe, but some people say this is going to end up as a fine, and then the CBN will give a little, and the companies will have to give a little more transparency, giving the CBN more access to their customer base and to their operations. How do you think this is going to end after 180 days?
Well,
I'm asking for a crystal ball right now.
Let's put it this way. The fintechs are going to survive. I'm very sure of that, because I don't think the central bank wants to kill any business. The fact that they've even come and said, okay, there's a 180-day freeze, that shows that the door is wide open for, you know, regularizing this process. We've seen that happen with the SEC, and immediately they issued a license to, I believe it was Chaka. So I see that a solution is going to come out of it. What needs to also happen is that from the government side, there needs to be a very clear policy statement to the community, to the community of innovators, community of investors, and the general public. Which way are we going as a country when it comes to startups? Not just fintechs, but startups. I know that there's the Nigeria startup policy that the government is pursuing. How can we engage more? This clear framework or clear policy statement that says from government of Nigeria that we're open for business, we want investments to come in, will help to sort of create that boost confidence of not just investors, but innovators.
All right.
Now we are in a very unique position. AfCFTA, the Africa Free Trade Zone Act policy has come in, and these fintechs or any company can flow in any direction in Africa. Nigeria's biggest export, in my honest opinion, to the African continent is going to be fintech and banking. And we need to ensure that we keep that lead in the market and dominate the African market.
All right, so I think a lot of Nigerians would like to hear that at the end of this. Ibrahim Bashir, thank you so much for joining me. We'll be keeping an eye on this, because I'm very sure before the end of the 180 days, there will be new developments regarding this situation. Thank you so much.
Thank you.
All right, and as he said, fintechs are here to stay, but anytime you try to regulate innovation, you can kill creativity. I think a lot of food for thought, particularly for the CBN and other regulators in Nigeria's startup and fintech space. Well, we have more for you. Right after this, we have NC4 to watch. Do stay with us. And a bit more investor conversation as we get started with NC4 to watch. Number one on our list, investors in Nigeria's bonds market will see a further moderation in yields this week on the expectation of robust liquidity in the financial systems. And this is coming from analyst projections. The projection is anchored on the expectation of an improved inflow into the financial system during the week. At least 281.77 billion naira will flow into the financial system from maturing Treasury and open market operation bills this week. This is expected to keep adjustments in interbank rates and, by extension, yields in check. At the end of the recent Monetary Policy Committee's meeting, the Board of Governors of the Central Bank of Liberia has cut the monetary policy rate by 500 basis points to 20%, with an upper band of plus 500 basis points for standing credits and the maintenance of the reserve requirement thresholds at 25% for Liberian dollars and 10% for the US dollar for the next quarter. Third on the list, about 50 business owners from across Africa have started a 3-day consultation in Dakar, Senegal, with micro, small, and medium enterprises on how to reap the benefits of the Africa Continental Free Trade Area. One of the critical issues raised in the deliberations was the potency of the agreement in transforming African economies, which continue to depend on the activities of MSMEs. And finally, Kenyan imports increased to 992 billion Kenyan shillings in the first 6 months of 2021 from 777 billion in the same period in 2020, as the economy slowly recovered from the COVID-19 slump experienced last year. According to data from the Central Bank of Kenya, the value of commercial imports in the 6 months to June amounted to 959 million Kenyan shillings from 752 million last year. Data shows that government imports amounted to 32.6 billion Kenyan shillings at the end of the first half of 2021, a 34% increase from 24.4 billion at the end of the first half of 2020. And that's today's show for you. Thank you so much for joining us. Don't forget that we go around the continent, to the north, to the south, to the east, to the west, and to the central, to give you all the biggest business, financial, and economic stories coming out of Africa. I'm Tolulokwe Adelere Balogun. Do you have a good one? And I'll see you again soon.